At the Bitcoin halves, multiply it by 4 18 months later, and it's been uncanny that that's been the price of Bitcoin. So I'm using a $35,000 number at the halving. And that's conservative. You're correct. That is conservative. Let's say we're at 50,000 in April. Okay, then it's a $200,000 handle. Let's say we're at 60,000, it'll be 240. But my long-term price target is that Bitcoin gets to easily half the market capitalization of gold.
Bitcoin has once again made news in the financial sector. According to Anthony Scaramucci, the founder and managing partner of SkyBridge hedge fund, Bitcoin's price might reach new highs, potentially topping $170,000 by mid to late 2025. What is he saying about the hype? Let's dive deeper. Scaramucci's prediction is based on a few reasons, including two major attributes. The recently listed ETFs appear first on the list. These financial products have been approved for trading on U.S. exchanges, opening up new opportunities for investors to engage in the Bitcoin market. The approval of spot Bitcoin ETFs has already had an impact, with Bitcoin's price surging beyond $49,000 in the past week. However, the digital currency has recently suffered a minor setback, hanging around $42,000. The second factor contributing to this prediction is the upcoming halving event in April 2024. For those unfamiliar with the nuances of Bitcoin, the halving is a technical event that happens every 4 years. During this occurrence, the rate at which new Bitcoin is released into the market is reduced. Scaramucci predicts that if Bitcoin is around $45,000 at the time of the halving, it would rise to an astonishing $170,000 within the next 18 months. Scaramucci explains the 10x Bitcoin price like this. Wherever the price is on the day of the halving in April, multiply it by 4, and it'll reach that price in the next 18 months.
Let's say we're at 50,000 in April. Okay, then it's a $200,000 handle. Let's say we're at 60,000, it'll be 240. But my long-term price target is that Bitcoin gets to easily half the market capitalization of gold. Gold now at about 14.5 trillion. If Bitcoin goes to 7 or 8 trillion, that's a 10x from here.
This simple math suggests a potential fourfold gain in Bitcoin's value following its halving, providing investors with a tempting opportunity. What kind of factors does Bitcoin's worth affect? Many factors affect its worth. This includes regulatory developments, market sentiment, and macroeconomic trends. Scaramucci's calculations can be right most of the time, but the cryptocurrency market can have ups and downs unpredictably. Scaramucci recently mentioned the Grayscale Bitcoin Trust's recent fall, which he blamed on investors moving their attention to new funds. Scaramucci believes that this move will have an impact on prices and that the consequences of the newly listed funds would take around 8 to 10 trading days to become apparent. The approval of spot Bitcoin ETFs in the United States is a significant milestone, coming after years of persistent work and applications from a variety of organizations, including SkyBridge. Notably, SkyBridge's application was refused in 2022, but it has since successfully entered the market with new offers. Is Bitcoin use in portfolios easier with ETFs on major exchanges? Definitely. With ETFs registered on major exchanges, a larger audience may now easily include Bitcoin into their investing portfolios. This enhanced accessibility may attract a broader range of investors, encouraging greater engagement in the cryptocurrency market. The SEC's shift in approach reflects a growing understanding of the cryptocurrency market's maturing, as well as a demand for novel financial products. As these ETFs gain traction, the entire financial sector is likely to become more involved in the expanding cryptocurrency space. One noticeable signature of these ETFs is their intention to levy fees ranging from 0.20% to 0.8%, which is significantly lower than the overall ETF market average. This fee structure is designed to make Bitcoin investment more accessible to a broader variety of investors. But how does investing in a spot Bitcoin ETF differ from purchasing Bitcoin directly? The ETF's major distinguishing feature is its simplicity and risk minimization. Investors can track Bitcoin price changes without the complications and hazards that come with actual ownership. Owning Bitcoin directly entails creating cryptocurrency wallets and accounts with crypto exchanges, some of which have questionable cybersecurity records, rendering them vulnerable to breaches. The cryptocurrency sector has faced obstacles, including bankruptcies and controversies, such as the well-known collapse of FTX, in which founder Sam Bankman-Fried was found guilty of fraud. Reports claim that several exchanges have been accused of violating security laws of the U.S. Even Binance, the world's largest cryptocurrency exchange, recently pleaded guilty to violating U.S. anti-money laundering rules. These sort of incidents have made many investors in a state of fear for entering the cryptocurrency market. ETFs are listed on strictly regulated stock exchanges, allowing individual investors to access them using their existing brokerage account. These accounts are under close supervision, providing an extra degree of security and oversight. This regulatory structure provides investors with additional confidence, particularly those who have been wary of the Bitcoin market's unstable history. Beyond regular investors, the ETF structure allows institutional investors to participate in the Bitcoin market. Some institutional investors have limitations when it comes to investing directly in unconventional assets. The ETF structure allows these institutions to obtain exposure to Bitcoin while sticking to their investing criteria. In 2021, the SEC approved a Bitcoin futures ETF, marking a significant breakthrough in the cryptocurrency landscape. Realizing why a spot Bitcoin ETF is unique requires looking into the complexities of existing Bitcoin futures ETFs. These products, while offering exposure to Bitcoin, keep track of agreements to buy or sell Bitcoin at a certain price. The difficulty is that they cannot accurately mimic price changes, and the costs associated with rolling over futures contracts can reduce returns, making them less tempting to many investors. While Canada and Europe have adopted spot Bitcoin ETFs, the dependence on the United States is critical. Many of the great investors, like Warren Buffett, are from the United States. This difference shows the potential amount of influence that a Bitcoin ETF may have on the financial environment. The ProShares Bitcoin Strategy ETF, the first Bitcoin futures ETF recognized by the SEC, had about $1 billion in shares exchanged on its debut day. Some experts believe that a spot Bitcoin ETF might outperform this figure, potentially reaching 3 times the amount when it debuts. Over a 5-year period, estimates imply the amount might reach an astonishing $55 billion. Beyond the financial ramifications, the creation of a spot Bitcoin ETF has a broader impact on the cryptocurrency industry. It is a significant triumph, boosting the industry's authority and pushing Bitcoin into the mainstream. Traditional investors usually don't invest in Bitcoin. This is because most of them are hesitant to invest, fearing the risk in it. But Scaramucci's predictions bring some hope for them. These incidents show the continuous conflicts between the cryptocurrency industry and the SEC. The regulatory authority has proven to be a strong force in its onslaught on the business. However, in the instance of the spot Bitcoin ETF, the industry emerges victorious. While Bitcoin has gained a commendable 70% since the grayscale verdict, its future direction remains uncertain. Analysts are considering the importance of interest rates in determining Bitcoin's future course. Thank you for watching. If you enjoyed watching our content, then do like, share, and subscribe to our channel. Don't forget to comment your thoughts below.